our rupee revenue grew by 7.9% to reach 59,692 crores. Our disciplined execution across multiple margin levers helped us achieve an operating margin of 24.3%. This represents a sequential margin expansion of 110 basis points, translating to 14,483 crores of operating profit. Our net profit for the quarter has come in at 19%, translating to 11,342 crores. Consequently, our EPS has reached 31 from 30.26 in Q1. Cash from operations at 11,821 crores is a healthy conversion at 104.2% of net profit. The board has declared an interim dividend of Rs 9, amounting to about 3,293 crores. In addition, the board has also recommended a share buyback of Rs 17,000 crores at a price of 4,150 rupees. This is in line with our practice of returning 80 to 100% of free cash flows back to our shareholders. In this quarter, despite macroeconomic uncertainties, customer metrics showed improvement across all bands. The number of customers from whom we make more than 100 million rose by 2 to 61 customers on a year-on-year basis. There has been a strong customer movement across all the other bands as well. In addition, our customer base of 1 million plus stands at 1,272 customers, an increase of 62 over last year. Moving on to segmental commentary, United Kingdom continued to its outperformance to achieve a revenue growth of 10.7% year on year. North America grew by 0.1% and Europe grew by 1.3%. On a sequential basis, happy to report Europe returned to positive growth. Growth markets of EMEA, Middle East and Africa and Latin America also had strong double-digit growths. Among the verticals, manufacturing, energy resources and utilities, and regional markets, essentially our banks and by BFSI platform, had strong sequential growth. On a year-on-year basis, manufacturing grew by 5.8%. Life sciences and healthcare grew by 5%, energy and utilities by 14.8%, and regional markets and platforms by 14.3%. As you can see, BFSI degrew by 0.5% and consumer business, which should be the new name for our retail, travel, transport and hospitality business, grew by 1% on a year-on-year basis. However, BFSI posted a positive growth on a sequential basis. Our deal wins continue to be very strong. Our order book closure for the quarter stands at $11.2 billion. This is a third consecutive quarter of more than $10 billion in order book. This includes 2 mega deals of JLR and BSNL, which we announced already. This represents a sequential growth of 10% and a year-on-year growth of 38% of TCV. Our order book for North America stood at $4.5 billion. For BFSI at $3.03 billion and consumer business at $1.44 billion. Our attrition continues to improve. On LTM basis, our IT attrition has reduced to 14.9% from 17.8% in Q1. Last quarter, I talked about our investments in generative AI. During the current quarter, we launched our AI.Cloud business unit by bringing in together the power of cloud, data, and AI/ML, including generative AI. Our customers are looking to leverage cloud migration, composite data foundation, application modernization, workplace transformation, and edge to cloud, coupled with AI to drive growth. Our AI.Cloud unit builds on our award-winning partnerships with hyperscalers and AI partners to deliver superior value to our customers. We also had an opportunity to validate our future-ready AI-first point of view and our 4-layered architecture for enterprise adoption of generative AI in our customer summits in North America and Europe, which were very well received. We are currently engaged in more than 250 generative AI-powered engagements with our clients. We have also defined a catalog of use cases that help our customers to fast-track their generative AI adoption. As mentioned in Q1, we completed the initial generative AI readiness training for 100,000 associates already. Further training is going on for next level of training. As an update on our R&D efforts, we have filed for 218 patents in Q2 and were granted 149 patents. Both the numbers are significantly higher than Q1. With those updates, I hand it back to Kritika and we'll open it for question. Back to you, Kritika. Thank you.
Thank you so much, Kriti. We'll throw the floor open for Q&A. Let's start with Anisha Jain from ET Now. Anisha, 2 questions.
One from each, right?
2 questions overall.
I'll ask it one by one, so just that it's easier. Good evening, gentlemen. Thank you so much for your time. Kriti, what explains the dip in revenue that we have seen this quarter? Is it a broad-based slowdown kind of request from clients to slow down the execution, or is it more specific to a specific client, geography, or vertical?
See, to some extent it's broad-based, but we've been explaining it last quarter also. Okay, the trend is same. Essentially, clients want to invest in newer technologies. So technology adoption is very high, and given the macroeconomic uncertainty, there is also a lot of request towards cost optimization projects. So we are able to sign new projects, and the projects that we sign, we continue to execute them, and they yield the revenue as planned. But in any given quarter, there will always be some amount of degrowth. Essentially, some projects will be complete, they come to a natural end, and some projects will get downsized. So if the degrowth is much stronger, or usually in a regular good growth quarter, there will be less of degrowth and more of new addition coming in. So net, you see a lot of growth. But what's happening now is that we are not fully compensating for the degrowth, which is more normal process. But we are not fully compensating because clients are also optimizing or pausing some of the ongoing projects, and so there's some deferral happening. So that's the reason why you see, while the TCV is still strong, the revenue growth is not reflecting in the revenue growth.
Okay, so let me toss it to NGS. Since the ramp-ups are slower, when are you expecting those ramp-ups to actually show into the numbers? And will the bulk of it only come in FY25? And let me just add the questions for others as well. Samir, the margins is something which has surprised us positively, and you're talking about how the continued push for growth, efficiency, and innovation levers leave further improvement room for the profitability. So are you hitting that 26% mark this year itself? And Milind, the question to you is, a lot of reports around you coming back from the hybrid model to full-time at work. Is that true? And what impact would it have on business?
Ramp-ups, I wouldn't say they are slower. I think, all the new projects that we are starting, as Kriti explained, right, those ramp-ups are according to the plans that we have put in place, right? But as he explained that, any quarter, for example, for TCS, there'll be projects which will get completed. In this quarter also, we have 2 large transformation engagements we delivered successfully, and they got completed, right? So to that extent, the revenue from those projects will be sharply lower in this quarter. So the revenue pull that happens from new ramp-ups, new projects that we have signed is according to plan, right? So
what is that plan now for the ramp-up of the other deals?
It's according to what we committed to the project, and it's a project by project we go through. But I don't see any variations per se that we see now typically when we execute large projects, right? So customers are looking for cost and optimization, so there are vendor consolidation, those kind of projects and deals that we are winning. The large-scale transformation programs like what we announced for JLR or what we announced for BSNL, those kind of deals are really shaping up. So it will have its own ramp-up plan, as a multi-year contract that we sign, right? I don't see any aberration per se in any one of those things. And we have a fairly good capacity in terms of people, and we have invested in our people, trained them. So they're all ready to be taking up some of these projects as we speak, right? I don't see anything which is an aberration to call out, right?
I know aberration from Q1 to Q2 as
Anisha,
well,
let's take this, yeah.
On the margins, we delivered a margin of 24.3%. That's a 110 basis points improvement. Let me walk you through the bridge before we come to FY24. So 100 basis points we got from disciplined execution. which is primarily from productivity, utilization, and further optimization of subcontractor expenses. Another 35 basis points we could get from driving efficiency, mainly in discretionary expenses. Like I called out last quarter, some of these expenses had achieved critical mass. And on the other hand, we continue to invest on infrastructure expenses. Now coming to our guiding, so our guiding weekend does remain 26 to 28. And with your best wishes, hopefully soon.
So not ruling it out, right, for this year?
I said it.
All right. Let me give you some context. We have hired a large number of people in the last 3 years, and for most of the period they were working in hybrid/virtual mode. We strongly believe that they need to come to work so that the new workforce get integrated with the larger workforce of TCS, and that is the only way they will learn and understand and internalize the TCS values and the TCS way. Having said that, so yes, we are asking people to come all days in a week. Having said that, we will continue to assess the work models and evolve depending on what works best for our customers and our employees.
So it's full-time back to work.
Yes.
Reema Tendulkar from CNBC TV 18.
Gentlemen, good evening. Kriti, the first question is, I understand that there is a natural revenue leakage when deals come to an end, but is the revenue leakage from existing deals a little higher? And also, despite seeing very strong deal wins, why is it that the fresh revenue, incremental revenue from deal wins, it's not able to offset this revenue leakage? And also, if you could talk about the improvement that we've seen in BFSI quarter on quarter, that's picked up. High tech has picked up, but on the other hand, manufacturing has fallen 17%, I think, sequentially, based on some of the numbers that 16.9. Is that correct? QOQ?
Manufacturing is at 5.8%.
QOQ.
QOQ, no, on a year-on-year basis, but manufacturing is a growth.
QOQ also?
Both QOQ
So we have
and
restructured a bit and we have called it out. So we have carved out a few things. But
So
manufacturing
just talk
on a
about
like-to-like basis is a growth.
sectorally, what's happening, pain points and where growth is.
Yeah, see, the first question you asked, right? Like, we have signed a lot of new deals. They have different tenures, and there is a revenue pattern, already defined. It's obvious, right? Like, if the existing projects get paused or optimized more than the incoming revenue, you will have. So that's that's what you see here. But what we believe, once things settle down, once there is a certainty, we believe that the reduction or optimization will be overcompensated by the new projects, and we should get back into growth. But we won't know when. Okay. But in terms of sectoral, like while BFSI returned to positive growth, it's a small positive growth. I think I don't want to read too much into it. UK continues to be our, if I go through the industry verticals, manufacturing is one actually been performing very well, and energy resources has been doing well. Actually, one thing of interest is all our regional and emerging markets are doing very well. Middle East, Africa, India, or banking platform, they're all doing very well. Banks and banking platform, they're all doing very well. And if you look at geographies, UK continues to be our performer for us. And again, on a positive note, Europe has turned positive. Like Europe, we have some specific, NGS was mentioning about particular projects closing, or once you complete an integration, after that the revenue drastically falls. So we had a couple of issues in Europe. In Europe, particularly, Benelux region is doing very well. Nordics is okay. The issue is to some extent restricted to Germany, France kind of region. So it's mixed bag in Europe, but I think long term our TCV has been good. Our order book looks good in Europe for us to set us on the right platform for growth.
NGS, when do you think discretionary spend will come back? And two, on deal wins, third consecutive quarter of $10 billion plus, would you like to step up your guidance on deal wins of $7 to $9 billion?
I think we are pretty happy with what we are doing, right? And I think I'll be happy if you are able to clock between 9 to 10 and that
So you're
range.
raising a little bit, right?
Yeah.
7 to 9 is now 9 to 10 on an average. Can we say?
Yeah, I think, a couple of quarters ago, I think somebody asked and I said that,
Yes.
look, I think 9 and 10 is a good number to have given what we are doing, what we are doing. But important thing is the kind of projects that we are winning, right? I think it's fantastic. And in every project, there is an element of cloud, element of automation, generative AI, ML. So it's a new technology-based wins, which is very satisfying for us. That also gives an opportunity for all our associates to try all the things that they learn, and bring in that collective experience and contextual knowledge to deliver that well, right? So which is really good, right? In terms of when the discretionary spend will come, I wish it happens from tomorrow, right? But just before coming here, I was watching, I think on your channel or something else, and one of the economists was commenting that economy is resilient to recessions and inflation, but it's limping ahead and not sprinting. And then it said that, look, growth projections are good, but it's below the historical averages, right? So I don't know what to read, right? But I think, as Kriti said, we have had a fantastic customer summit in US and in Europe. They're all comfortable with the way that we are delivering to them. See, there's a portfolio of projects that we execute for them, which we continuously disrupt. That means that we have to keep optimizing it. We have to adopt and adapt technologies and then give them that more for less or less is more paradigm in which we have to execute. So that optimization takes place, which is good for us and which releases experience to people to the other pool that we have. So we are happy with where we are. Good that we are clocking some large deals. And I think, we continue to execute well on them and then hopefully, we will do well in the coming quarters.
Samir, are the large deal wins margin dilutive? That's the big fear in the market. And Milind, your headcount has fallen by more than 6,000 on a quarter-on-quarter basis. Little bit on that. And also you had a plan to onboard 40,000 freshers this year. On track to do that, and how many have been done so far in the first half? Thank you.
So, Rima, on the large deal wins, we look at our margins on a portfolio basis, and we try to ensure that our individual portfolios deliver the desired margins. And during a deal cycle or a life cycle of a project, it would go through various phases and might have different margins. But overall, our focus is delivering having the portfolio deliver the required margins.
So over the tenure of the deal, the margins should be at the
Absolutely.
Initially, it will be lower.
Absolutely. We can take strategic calls, but in general, yes.
But are you taking a strategic
Rima, let's.
We would definitely we would take strategic calls on specific accounts.
margins to get the deal?
At a portfolio level, guiding beacon 26 to 28.
We can take this more offline.
Regarding the negative headcount, I've been saying for now last 3 or 4 quarters that we have been investing heavily in our fresh talent, and that investment is now paying off. Having said that, there is a reduced attrition. We have recalibrated our hiring numbers, and as a result, our total hiring is less than our attrition this quarter, and hence the negative number. That is basically the dynamics of that. Nothing more than that. It is basically more you see as a investment paying off. That is the way to look at it. With respect to trainee hiring continues to be what we have been doing all along, and we continue to onboard trainees. We onboarded trainees last quarter. We onboarded trainees in this quarter, and we'll continue to onboard them as we go along. The number of how many we get them every quarter depends on the business situation. But what I tell you, and I've been telling all along, that we obviously honor all the offers. So there may be some delays a quarter here and there, but they will come on board.
Thank you. Next question from Ramata Mazumdar from the Economic Times.
Hi. A couple of queries for Milind first. Again, going back on fresher hiring, just want to understand, has the company started the campus placements process? I understand it's a bit delayed this year for all companies. So the commentary on that, what is the situation with the variable pay for this quarter? And, from Kriti, I would want to understand, one is, what is the outlook from customers in North America? Like, what is the feedback that you're getting over there? That is one. And second is in terms of the situation that we have seen in Israel, just want to understand if there's any impact to the business of your company or to any of the client projects that are, whatever is operating from the region. So, yeah.
Amita, campus hiring, as you know, we have discussed many times, is a core strategy for TCS, and we would continue to hire trainees every year, and we have initiated the process this year as well. So that is on. With respect to variable pay, we are going to basically have 100% of the variable pay for 70% of our workforce. The remaining workforce will get paid based on the business unit performance.
Amita, if you look at what's happening in North America, overall economic macroeconomic situation is slightly confusing, right? Like your North America unemployment rate is still low, and inflation is slow coming down. Okay, but the outlook for spend, actually the spend is still high, but what we are told is the household saving is coming down, and it's projected to slow down further in 2024. So this is the backdrop in which you need to see the discussion. Generative AI has caught everybody's attention. When we talked about our customer summit, almost everyone discussed about generative AI as a key theme, how they are trying to leverage it for new products and services. And given that there is a overhang of economic uncertainty, there are discussions around how do you optimize projects, is there an opportunity to consolidate, operating model transformation. So these are the broad themes that you hear, like nothing very specific or specifically different from previous quarter. On Israel, I would request NGS to answer because most of the projects are anyway directly managed by him.
No, I think at the outset, I want to thank and I want my salute to all the employees in Israel. They have stayed put and they are supporting our clients, and we are in touch with them and ensure that they are safe, number one, and do their bit to support the community in which they live, right? I think that's the first thing. Overall, in any of these kind of situations, we work very closely with our customers and listen to them in terms of what is it that they are planning to do for their own workforce, what is the priority for their applications and system support and things like that. So I think we have talked to all our customers, our employees, and our business continuity plans where it need to be executed. We are on track to execute it. So as we speak, I can't say it's business as usual, but from our obligations perspective and our focus to support the community that we live, I think our leadership team here is in constant touch with our customers and employees to do the right thing.
Do you have a significant employee base also?
It's about 250 plus employees and dependents that we have.
Shivani Shinde from Business Standard.
Hi, gentlemen. First question to Milind again. Is it fair to assume, especially with getting employees back to office for 5 days, the 25 by 25 strategy is done away with, or is there a rethink happening within the company on that? Kriti and NGS can also add on to that. NGS, $11.2 billion order book. Can you break this up for us in the sense, which are the geographies which are leading it? Europe, I think UK, this is the third consecutive quarter where it's leading the growth. So if you can give some color on the 11.2 billion, also is BSNL in it? And of course, in this quarter, do we have a BSNL impact? Kriti, you said that, two questions for you. You said that your regional and smaller markets or the rest of the world, rather I should put it, has done very well. In the current scenario that's happening, do you see some impact? Middle East, do you see because of what's happening?